Hey everyone, what's going on? Welcome back to another edition of Let It Grow Investing. I think we're on 264 now. We've been doing this for quite some time, but man, this was a crazy, crazy week out there. And if you were on vacation and you came back, you'd say, hey, yeah, kind of calm. But if you were paying attention last Friday and into this Monday, it was red out there. It was brutal. And man, hopefully you guys had the Tylenol already because it was quite a dizzying week and definitely a bit of a headache out there. So yeah, so really what happened, we'll dive into that. I do want to say, if you're following along to the Facebook group, I did do a quick update Monday morning over there when the market pre-market, the Nasdaq was down 4 or 5%. Man, it looked awful, 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 awful to say the least. And I tried to ease some tensions, tried to give a little bit of perspective as to what was going on. So I don't normally hop on over there, but I will if things look like that. And that was the first thing I did that morning. I was actually getting ready to load up and head out. And I said, you know what, let me just go ahead and do a quick 2 minutes or whatever it was and just kind of explain what was going on. So I did that. But if you weren't here for that or you didn't follow along on the Facebook group, there is a link in the description. And that can definitely help you out in some of these times. But really, what was going on? Well, we had everything going on Friday. We had the market sell off. We had a lot of just craziness around political uncertainty, around a lot of market being kind of overbought. We were looking at a lot of these stocks really just kind of running away with, some gains here. And yeah, the Nasdaq really just decided to start selling off, right? Which made sense. I've been kind of staying, excuse me, away from it for a little bit on the tech side. Things looked a little rich. So yeah, I've definitely kind of been saying that for a minute, right? I've been looking at dividends, healthcare, other ways to be a little bit more diversified, buying into utilities right now. Even some of those are kind of running up. Next Era Energy, I'm looking at that one right now. That one did run up. But yeah, a lot of those started making more sense to me as the tech sector really just got strained. Yeah, I told you guys I wrote some covered calls. A couple of those actually expired over the weekend. Enphase and Tesla. I'm good to go. I just collected the premium on both of those, and I'll probably write them again. Get a couple $100 for simply writing the covered call, and kind of rinse and repeat. But yeah, so come Monday morning, well, there's a lot of different things going on around the world that also strained what was going to happen in the market. Well, so first up, the big thing that really no one was really paying attention to, or at least I wasn't paying attention to, was the fact that the Japan market was it was really cheap, right? The interest rates were really low over there. People were borrowing money. They were borrowing on margin. They were investing, or they were taking that yen, converting to U.S. dollars, buying, U.S. stocks or whatever they were buying, ETFs, whatever it was, and yeah, they had it on margin because money was so cheap. So they were taking cheap money and investing in things like NVIDIA. So NVIDIA is going crazy. Well, then NVIDIA starts getting sold off. The Bank of Japan actually raised rates, and that made the money a little bit more expensive over there. And as the NASDAQ started plummeting, they went ahead and margin called for a lot of these people, say, hey, you got to pay back the money. We need the money now. So these people had to sell off at a loss on Friday, convert dollar back to yen, and the dollar is weak compared to the yen, so they're losing money there. They're losing money on the sale of the NVIDIA stock that just went down 30% or 40%, whatever that number is, and now they're going and taking that yen back and trying to repay their loans, but they're also having to sell off a lot of their stocks that are in the Nikkei, in the Japan stock market. So the Nikkei went down about 12 or 13% Monday morning, which was Sunday night here. And then that really had this spiral effect of what is going on. The Nikkei went down 12%. We're going to just completely sell out of the NASDAQ. But it kind of right now looks like an isolated, pullback and then margin call on those investors. Things are still rocky here. I don't want to say that we're out of the woods. I don't think that we are. I think we're going to retest some of these lows. yeah, I don't think that we're out. I don't buy it. But so I think it is a bit of a bull trap, meaning that stocks have then run back up this week. But I don't know that we're in the clear. So we get people coming back in, money on the sidelines, continuing to invest in these stocks that they think got too cheap over the course of that 3 or 4 days, that things were really looking bleak, really just down on a lot of these individual names. So that is more or less what happened. Margin called. Those people had to lose money, and that brought the Nikkei down. That brought some other markets down, and then eventually it brought ours down. But we had money on the sidelines. People ran back into the market saying, hey, I want to sell these stocks. I was ready to buy them for 20% more, 2 weeks ago. I'm going to go ahead and buy today. So that did happen. We had a lot of interesting things going on. I will pull up a couple of them here. We did have earnings from Palantir, which looked awesome. We had earnings from Eli Lilly, which looked awesome. Costco looked awesome. So those are some different areas of the market that start to really show us where money is being spent, right? Costco being up 7.1% on the quarter, and the online sales for Costco were massive. So that is definitely something that is pushing that one higher. It still shows us that the consumer is still maybe spending more than what we were, or buying more than what we were. Maybe it's not just the prices. I didn't look at the specific breakdown of where that money was going to, if it's the same basket of goods or where we're spending. But we also have Walmart coming out this week. So we will see if the consumer is still strong at Walmart. We'll see what's going on there. But Eli Lilly posting the fact that they are going to be selling more Mounjaro and Zepbound. I will try to see if I can't pull this one up for us and see if I've got Eli Lilly, which is ticker LLY. Let me get over to E-Trade, and then I'll share my screen with you guys. See if we can do this kind of seamlessly. Eli Lilly, and I will share. So hopefully this one comes up. So yeah, Eli Lilly, we're sitting at 891, after hours 892, whatever. But yeah, up 5.5% on some of this news. So we're also getting to a 50% gross margin by 2026. Let's see if we can't get to that article that I was reading. And that was projected originally to be 2028. So some of these margins are coming in sooner than we previously had thought. We're getting some price target upgrades as well. Where was this article? Was it Wells? No, wasn't JP Morgan. I'll read that one though, see if we can't find anything. No, that's worthless. Dang it. Sorry, guys. Turning around. These are the latest winners. Yeah, that's not it. I forget what bank it was. It might have been Morgan Stanley. Let's take a look at this one. No, that wasn't the article that I read. Anyhow, the gross margin is coming in quicker. We've got more and more demand on Zepbound and Mounjaro. We do not have the backlog anymore. That was about, I think it was 50,000 they were short by. That might be wrong, but they are able to produce more and more and keep up with the demand that is going on with these products that are for diabetes and for weight loss, or a combination thereof. And the earnings are doing well. The price earnings multiple is expensive, but the growth is just stellar. So the fact that we're getting to that 50% gross margin sooner than we anticipated, we have more and more demand, and we can now keep up with the demand is huge for it. So I'm really curious to see what you guys think about Eli Lilly, or ticker LLY. Definitely some big things going on out there for them. And man, I'm trying to think where we saw this one, and I thought it was expensive then. It was probably back in the fives, right? And I thought, man, this thing is really getting frothy, but it continues to outpace. It is one of the best in the sector. And I didn't actually know this, but this time last year, we were buying QQQ. That's what we bought for our investing challenge. I will get over that in a second. But one of the funny things here on QQQ, the portfolio, if you look at number 10, actually, no, that's Costco. Sorry, wrong one. I thought Eli Lilly was number 10, but it's actually Costco. I thought Eli Lilly was in there too. I might be mistaking my top stocks of the week, but anyhow, Costco's in there and all the other tech stocks. Right? Doesn't really make much sense to throw in a Costco into a tech holding, essentially Apple, Microsoft, NVIDIA, Amazon. The list goes on. But then we've got Costco. But yeah, Costco did definitely have a great quarter. Let's take a look at that one as well, real quick, and just see where that went this week. And yeah, 854. We've got definite moving up here. We did buy this one probably back in the 500s. We did not buy Eli Lilly in the 500s. We should have been buying both of them, but they've both been winners. And I'm definitely happy to hold Costco, even though this dividend is not really much to write home about. But yeah, Palantir. Let's take a look at Palantir. Palantir continues to impress. A lot of people really did not know where this one was going. We didn't really believe in the path to profitability. We didn't really believe in the CEO, Alex Karp. It didn't really seem like he was on board with trying to make a profit. It really seemed like this is just his project, and he wasn't really too concerned about the actual fundamentals of the company at some point. But that has definitely changed, right? We've got Palantir partnering with Microsoft. And that partnership, if we read this first article here, what do we got? We've got Palantir and Microsoft recently announced a partnership to offer enhanced cloud, artificial intelligence, and analytics to the U.S. defense and intelligence communities is a potential game changer. So they did partner, right? They partnered on this deal. They are going to be working now with the government, specifically through Microsoft, to give a lot of different people a lot of different ways to use AI in their everyday, workload. So this is going to be potentially huge. And the fact that it's happening with Microsoft, I think, is also massive. We got, 2 reasons why I believe it's just getting started. I also agree that Palantir could just be getting started. Someone's going to hold off overvaluation. Okay, I get that. But man, I don't know. The price is getting crazy. But man, this one this week, we're at 30 now, guys. And I think the 5-day, if I look at the 5-day, it probably hit 21. Where was it? Well, what's going on, guys? Jeff here with Let It Grow Investing. And I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time. And they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape, for longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years. And I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's 1stphorm.com/letitgrow and check out some product and, see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. It might have been on the month. No, I guess it got down. I think it got down lower than that. I remember seeing like 21 or 22. So I'm not too sure what that was. Maybe it was a pre-market drop. It could have been pre-market Monday, and that might actually not be recorded on this chart. But man, this thing had probably around 30% of movement in the week, if I am remembering correctly. And that is huge. That is a huge amount of swing within this week. But they did come out with earnings, come out with everything with the partnership with Microsoft, and that is huge. More with the OpenAI tie-in to Microsoft. So there's a lot of different things going on there. We've also got Amazon, right? We've got Amazon coming out and offering a deal with TikTok. Now, Amazon and TikTok, you normally don't think of them being together. Really not too sure what's going on with TikTok in the US. But on Amazon or on TikTok, they're going to have links for products. And now you're not going to be redirected to Amazon, but you're going to be buying Amazon product through TikTok. So that's going to be huge. We've also got a lot of dip here in Amazon on the 1 month, right? We're down about $30 on 5-day. We're up, right? How does that happen over the course of this week? That just does not make sense. But we are up, and man, I still think that this thing has a lot of room to go on AWS with things with AI, with the partnerships that they're going through. A lot of different changes for Amazon that I still believe they have a lot of upside. And there's 41 different analysts here that are basically agreeing with me, right? We got 34% of upside on average, but on the low end, you have 11%. So even if you just want a small little double-digit gain, potentially Amazon could be a great way to go to get into this stock right now. I think that if you're looking at this chart from what is this? Probably back July 1st when we're at 200. We've had a pretty significant drop off. We've given back a lot of the gains, but I really believe this thing really makes sense here. I'm really thinking that I should probably buy some more of this. Did I buy any this week? I did not. I did not buy any of that. I was lucky enough to get NVIDIA. I had a limit order on NVIDIA at $95, and somehow my limit order triggered. Well, not even somehow. It was Monday morning when the stock really sold off. We opened, and my limit order actually triggered at $92. So I'm up $12.75 per share on NVIDIA this week by simply setting that buy order for where I wanted to purchase it, and it came down to me. I'm not chasing this thing. I'm letting it come to me. And on NVIDIA, you've got about 37% of upside left from here, and limited downside. And I told you guys I really wasn't looking to buy more NVIDIA. It's still my largest position, but I think it's still getting too cheap in the 90s. So I went ahead and purchased some more. The PEG ratio is still stupid cheap, and I really think that this is a long-term winner with some rockiness right now. I think we're going to have a lot of different things that are going to be hiccups. People saying there's going to be more delays on the Blackwell chip. Some people saying that it's coming sooner. Whatever you think there, I still think that NVIDIA long-term is going to be a winner. So I went ahead and purchased some more. And I still think that there's plenty of room left to go, but I will let that price come back down to where I want to buy it. I'm not chasing this thing at any stretch. What else we got? We've got... I did want to talk about the VIX. We saw that too. So I do want to cover the VIX as to where this thing was on Monday versus where we were on Thursday. So if we look at the VIX on 8.6, I do need to probably zoom out a little bit so we can see exactly what happened with this spike. We went up to $39 on the VIX, which is extreme fear. And, somewhere back here in July when we were at 15, 16, I thought to myself, man, this is too calm. I'm fearful of this number. I'm fearful for the fact that everything just keeps going up and the VIX is still sitting so low. This is going to be your volatility index. So when things are really low, you're looking at a very calm market, a very positive market. When the VIX does spike like this, that is a very fearful time. So you see the VIX go up, normally stocks are just going to plummet. So I did do a little bit of trading off of this and try to protect a little bit, right? But the VIX has cooled back down to 20, but I still don't know if I believe it. I think it's going to climb back up, and it's just going to be one little story that gets us there. But the one thing I did do is I shorted the QQQ, or I bought the ETF that shorts the QQQ. I didn't actually take the positions in options, right? So what I did here was I bought the SQQQ, and basically this is going to be something that is going to be an inverse to the market. So if the QQQ goes down, this is going to rise in price. Similarly, if reverse would happen too. If the QQQ goes up, this is going to go down. So I bought this at like 11.10, thinking that I'm going to buy a little bit. If this thing flips on me, if the QQQ continues to go down, I will be making money on shorting the triple Qs. So that is what I did. Right now, it's losing money, but I don't know that this is done. So I might even add a little bit more to this, thinking that this thing could spike back up. And if you look at it over the course of a year, basically it's the opposite of what the QQQ did. The QQQ kept rallying and this kept dropping. So I'm thinking at some point this thing's got to spike back up, maybe get to 15 to 17, $20 even, and it protects some of your losses on the other end of what your big seven stocks, your triple Qs are doing, your tech plays. So that is one thing that I did there. It's not paying off yet. It is very volatile. It is going to be a very rocky ride, but it's one thing I was trying to play in order to take some advantage of what was going on out in the market and some of the volatility and craziness that was out there. So the VIX and the QQQ are going to, or the short of the QQQ are going to work kind of hand in hand as to what's going on out there. As the VIX spikes, normally it's going to sell off, and the shorts are going to gain in position. Might be a little hard to see, but hopefully that makes a little bit of sense to you. And what else? We've got Ohio votes to legalize marijuana. That also had different pot stocks up on Friday. Like Planet 13, what is that? PLNH? Yeah, that's the one. This one spiked up 15.5%. I don't really follow a ton of these, but that is one that I know. I just want to kind of bring that as more and more things get legal, more and more states get legalized. I think that more and more of these stocks are really going to rally, and they can be very volatile around an election cycle. So that's definitely something to keep an eye on as well. We've got talked about Amazon and TikTok. We've got like earnings on tap. We've got HD, Home Depot, and Walmart. Jobless claims. There is reports coming out. I believe CPI is this week. As far as banks, right, we've got JP Morgan. They are partnering with OpenAI, and that is for a platform called LLM Suite, and that is going to around 60,000 employees to basically help them with their tasks throughout the day, to write different notation or write different emails. So they are going to be launching that. I still think that JP Morgan's one of the best run banks in all of the banking world. And it is a premium stock. It generally trades a little bit rich compared to other stocks. The PE ratio was at 11? I think this is what I just saw. Price target 222. Maybe not a screaming buy, but definitely a stock that I think makes sense in a lot of different times. I would probably let it cool down a little bit before I added more of this one, but definitely something there that I think could be an option for some of you that are trying not to get into more tech names. The regional banks kind of got hammered this week with some of the news out there, but I still believe that those should do better with more lending coming back online as rates come back down. We've got that. We've got Apple, right? Let's look at Apple, because Berkshire sold off around half of their position of Apple stock. We do have Apple saying that they are going to be building up more demand for the new iPhone, and I know that they were looking at being able to keep up with that. Do you disagree with Bears? Yeah, Berkshire, it is still their largest holding, so I don't know that I really think that that is the craziest problem here of Berkshire selling out. They are now the largest holder of T-bills. They hold more than the Federal Reserve, I believe, or the Treasury. Who was that? So yeah, Berkshire is just really loading up on bonds. We've got that there. We've got where is this article? Sorry, guys, I am really dropping the ball on articles today. We've got Apple sitting at 216. I don't know that it's a screaming buy for me now, but I do think that this is definitely one that you should own and kind of hold it long term. So again, if this thing does drop, I think that it is always a solid stock to hold, even through a downturn, as they are so cash rich. They've got enough on the books to go ahead and buy pretty much anything. But I know they are trying to get rid of some of that cash by doing buybacks and things like that. We got maybe it was an article on Instagram that I follow. Let's see if I can't find it real quick. All right, so we got that. While I'm looking, I will be saying for this week, I did make some new buys. I was buying Target. I bought some UPS. I bought the short of the QQQ. Bought Chevron. Told you guys I bought NVIDIA, and I bought more Civitas resources. Let's see if I can't get this article up here on Apple. Oh, I did see this one on NASA saying that the Starliner astronauts could return with SpaceX next year. NASA officials and Boeing have been debating whether their Starliner is safe enough to return to the astronauts to Earth. While Boeing is vouched for the craft, and NASA officials said they're working on backup plans that depend on SpaceX. Another reason I'm not buying any more Boeing. Oh my gosh, it is just brutal out there. I don't even know how they're not the laughing stock of the world at this point. It has just been problem after problem for them. So we've definitely something to be concerned about. But Disney, that's a good one to talk about. Disney did report earnings this week as well. EPS beat $1.39 versus $1.19. Revenue of around $23.2 billion, beating expectations of $23 billion. So, a $200 million beat, even though that 0.2 doesn't sound like much, it actually is. This is the first time that Disney's combined streaming business, which consists of Disney Plus, Hulu, and ESPN together, turned a profit. That's great. Finally, that has been forever. So still some major concerns of the park business, right? The park business makes up like half of their revenue, I believe. And I will actually get right back down to that. We've got, experiences, 53.9%. So entertainment, that's probably your movies and then your streaming and all is 23%. And the sports, the ESPN side of things makes up around 22%. But experiences. A lot of people think that the travel is going to slow down. So they're still fearful of what's going on at Disney. Man, I don't know. This thing has really been in the doghouse for a lot of time here. Go woke and stay broke or whatever. That's definitely a concern. I know a lot of people are not buying this one because of the woke agenda. I know a lot of people are fearful about the state of the economy and how much Disney it costs to go down there. So 23 analysts say that you got around 37% of upside. I do believe that there's a lot of upside. I don't know when that's going to happen. But I think that $86 on Disney is too cheap. I do believe that the fact that streaming is showing some profitability is awesome. I do believe that they're still going to have a lot of people going down there. And some people are probably going to go because they think that others aren't going to go. So now that it might be the time where Disney's not as crowded, which I don't know that that's going to happen. I really don't. So I think that this is probably a good long-term ad right now as we're seeing streaming coming to profitability and we're concerned about the consumer. I could see adding Disney to a portfolio. I could. I know some of you are going to disagree with that, but they are going to raise their prices as well. So starting mid-October, most plans for Disney Plus, Hulu, and ESPN will cost 1 to 2 more per month. Shopify reported this morning. We got EPS of 26 cents, beating 20 cents, revenue of $2.05 billion, beating expectations of $2 billion. So Shopify looking better there. Microsoft, problems with Delta. Microsoft is saying that the airline declined repeated offers for help, and now they're trying to potentially, Delta's trying to sue CrowdStrike for around $500 million that they say that they lost through that outage. Super Microcomputer did announce a 10-for-1 stock split. So that thing has been on rally mode. Let's take a look here and see what the SMCI is looking like. Ever since NVIDIA even looked to be getting involved. When does this stock split happen? It says 8/6, but this... I don't know that this, it might not actually be, it's going to be trading. The split's going to happen on October 1st. So we still got people saying there's around 61% upside on SMCI. I'm guessing this thing went higher than that before. I might be wrong. This thing definitely cooled back. Yeah, 1229 back in March. This thing, man, has been crazy. This has been a roller coaster ride. I know some of you would ask me somewhere in the 500 range or 700 range. And I said, not for me, not right now. I really don't know what all the euphoria is around this name. And I'm hesitant about buying things when they're up 1,000% in the course of, I don't know, 6 months or whatever it was. I just can't see it. So for me, this wasn't a buy then. I don't know that it's a screaming buy now. I'd have to take a look into it. There's definitely some upside from some of these analysts, but let's see what the more recent ones are saying. And even at that, I still don't know that I believe any of them. 1,300, we got a hold from KeyBank. We got a hold from B of A. Buy from JP Morgan, buy from Barclays, and Northland Securities is a buy. But look at that spread. Barclays is a buy, saying 693. Northland says 1,300, and JP Morgan says 950. So they're all what, like $400 apart, or $250 to $400 of price target variance. So who are we trusting there? It's not like we've got a great path as to where this thing's going to go, or where that PE multiple is really going to trade at. So I'm definitely leery of any of these. And for me, I probably am not buying this. Maybe we'll throw it into an investing challenge at one point, but not right now. So that one happened. That is going to have that 10 to 1. So this will be trading at $50.87 roughly as of October 1st. Granted, whatever the price does by then, it'll just be cut into a tenth. So we'll be buying more shares. It'll be better for options, things like that. So we got that out there. We've got go right into the investing challenge. I was trying to find that Apple article, wasn't I? Sidetracked myself. Palantir and Wendy's partner on AI as well. I didn't hear that one. Palantir signs a deal with Wendy's to power their supply chain operations globally. That's cool. We got this, really? Pop-Up Bagels and Mondelez owned Oreo just announced the launch of a new flavor, cookies and cream cheese made with Oreo. That's wild. What else we got? I really wanted to find this article for you guys, but I am struggling to find it. Maybe it was on this one. JP Morgan. No, we talked about that. We've got sorry guys, I'm not finding it, but I know there is increased demand on the iPhone, and that's what we've got there this week. So first up, I did want to cover stock of the week for week 33, and we did have 5 names. That is kind of the industry standard around here anyhow. The 5 names this week were MPW, Medical Properties Trust. We had Costco, COST. Probably should have been buying that one a while ago. We had L3 Harris because I think that defense is a safe sector to go ahead and buy into. We had healthcare, pharmaceutical player Merck, MRK. Again, pharmaceutical seems to be a little bit more stable through this crazy economy as well. DraftKings, for a lot of the sell-off that they had, and I don't know that it was completely justified, so I think it was a little bit oversold. We were looking at the RSI, I believe, and I really thought that one was oversold. But you guys have voted for Medical Properties Trust. So MPW will be adding $200 worth of MPW. MPW is still paying a pretty decent dividend. They sold off some of that property in Arizona, I want to say. Let's take a look here. So $4.66. We got around a 12.5% dividend. We sold. Revenues fall, shares drop 7% pre-belt on the 8th. So was that Thursday? Yeah, Thursday. Beat by 2 cents, beat on revs. So revenues fall, but they still beat what they were going after. I know we sold off some of those properties. So we do have a lot of negative out here. I think it's going to be a matter of time before they get their house in order and really start to rebound. So I think the reason that people are wanting to add this one is for this dividend that is 12.5%. This has been cut before. I am cautiously, hopefully optimistic, but very cautious about this 12.5% dividend. I do believe that it could be in jeopardy, especially with a lot of the sell-off, a lot of the debt that they're trying to pay back. Hopefully the fact that we get into some cheaper rates, maybe they can refi out of some of these things that are pretty expensive and pay down some of that debt. But yeah, we're sitting at 466, average price target being 5.25, so around 12.5% of upside, and that 12.5% dividend for however long that lasts. Hopefully we can see that for a while. So I will add $200 worth. We added this one back in 2023 for week 33, and now we're doing the same thing for 2024, week 33. So now for this week, what are we looking at? Well, first up, I am going to look at Civitas. And Civitas is another oil and gas player. I really do believe that this one has some room to run. I know that we had some price targets that were up into the 90s. We got a quarterly dividend around 3.25% right now. We've got sustainability report. We've got earnings revenue increase. So $2.15 per diluted share, up from $1.72 a year earlier. They missed on revenues. They expect sales volume guidance increase to upper half of original guidance range. So they're looking at the upper half of the original range. They narrowed that window. They got a quarterly dividend of $1.52 per share. That is not what this says. So this says it's a 50-cent dividend and 3.27, but I believe that it is about triple. So it should be around a 9% dividend on this. This should be accurate. I don't know why the E-Trade one is not. Oh, that's why. 50 cents a share and variable dividend of $1.02. So that is what's going on. Let me get back to that real quick. So it is counting the 50 cent as the base dividend, but then they do have that variable dividend they pay based on the actual earnings that they have. So that is going to be the difference here between what E-Trade is saying and then what we have as far as that variable dividend that you're also getting. So it is around 9%. It does pay really strong. This thing has trended down. PE is cheap. The earnings are very strong. Strong dividend. It is trading at the bottom part of the range. Analyst research, like I said earlier, it's in the mid-90s. We did get some price target bumps. Average being 57% higher from here, the low being 40% of upside. That's why I was buying it this week. I think you guys can understand why I'm buying it. Yes, we have a weakened consumer. Yes, there's EV threats. I'm not as concerned about that at the moment. I think that this is a definite buy for me. I don't see why I would not buy this with that amount of upside, with the strong dividend. Yes, it's variable, but I will still take the 3% to hold on to the shares and roll with the variable side of the dividend as well. So that is number one, CIVI, and that is why. Number two, we're gonna look at something different here. We're gonna look at Barrick Gold Corp, and we're sitting at 1741. Gold prices have come down a little bit, but I think more uncertainty, more volatility, and this thing is going to rally. Plus, I think it's another way to diversify a good bit away from the dollar. You're into gold. It's going to be more of that commodity. So you are getting a company that's paying around a 2% dividend. PE is around 21. Has traded down. I think we got a decent amount of upside here. I want to say it was around 20. I did look at this earlier. 23. So we got 35% of upside. So again, you're diversifying away from a weakened dollar. You're getting more into gold. There's a lot of different reasons to do that right now with the economy that we're in, with the amount of uncertainty on the political, with Iran and Israel, with Ukraine and Russia, with Taiwan and China. There's a lot of different reasons to look at some gold players. And normally through a lot of that uncertainty, you're going to see rises in gold. And then in a strong economy, you're still going to see rises in gold. But maybe not as much as the next one. Then the next one is going to be a Bitcoin ETF that we haven't looked at in a while, and that is going to be IBIT. It is the iShares Bitcoin Trust. So again, with the weakened dollar, I think some of these people are going to roll back into Bitcoin. So if you don't want to keep all your cash in USD, you can swap into Bitcoin. And, we did have a sell-off in that as well through a lot of this Japan margin call kind of downtrend, and would have been a great time to buy more Bitcoin and have it really rally back quicker. I don't think the dollar's not going to rally back as quick as what Bitcoin's going to do, and it's going to be more fluctuating. And this is going to be a way to take some interest into what the Bitcoin price is going to do over the future, right? I have talked before about BITO, and that is a Bitcoin strategy that is going to be playing the futures game. So it's more of a bet on what's going on out there, but it is a way to get about 47% of dividend. But it is going to be tied more to futures. And yeah, I mean, you can play it either way. I've got some of BITO. I have not yet bought IBIT because I hold Bitcoin in a different wallet on a different app, which is going to be crypto.com. So if you do need a link to get started over there, there is one in the description. But yeah, for this week, it is IBIT. It's an easier way to buy into Bitcoin in the ETF, hold it into whatever brokerage account that you have or whatever account where you're holding your stocks. You can buy it right there. So that is going to be number 3. I think with a lot of the volatility out there, Bitcoin trading down on some of this uncertainty. Next step, I think that this thing goes up. I really do. We had the halving event, and I don't think that we've peaked out yet. So I think that we've got a good amount of room to run on Bitcoin. So IBIT is going to be number 3 for this week. Number 4, you might have guessed it earlier, Palantir. I don't think this thing's done either. I think we've got some people saying that this thing's overvalued. I'm thinking that with the amount of AI, the partnership with Microsoft, the partnership with Wendy's, the partnerships that they're doing everywhere, man, I think that this thing is just getting going. We saw the article earlier, and I really do believe that a lot of the things that they're doing are next level. The spending in government is not going to stop. The spending on the corporate side might slow down a little bit, but I think a lot of that money coming in from government contracts is going to be huge. The fact that now they're partnering with Microsoft to get their product into more hands, I think is also going to be huge, man. It's going to be massive to get that the AI software into more government hands. Those contracts are worth millions, I'm sure. And the fact that Palantir's there and they're in most of those spaces, I think that this thing's got a lot of room left to go. And I do think that they're just getting started. So there is downside on this, right? 19% of downside according to 13 different analysts, but we do have a high of 38 with a low of 9. I don't think we're getting to 9. I don't really think any of these people think we're getting to 9. But Wedbush coming out on Friday, actually, and saying 38. Moness out at $18 on the 6th. Morgan Stanley, 20 on the 6th as well. Argus saying 32 on the 6th. I happen to side with more of Wedbush. I don't know that we're going to get to 38 in a year. We definitely had a rally here recently, and that would mean that this chart is going up to this kind of golden orange line here, closer to $40 by the end of the next 12 months. And I don't know that we're getting there, but I definitely think that this thing has legs, and I think that on any kind of severe downturn was probably a good time to buy it. I probably should have bought more Monday. I did not, but I do think that we're going to get more volatility in this name for sure with what's going on in the market right now. Number 5, one that we should have bought before, one that I kind of kick myself oftentimes that I did not buy. That's Eli Lilly. Now, I don't feel like I'm chasing this. I feel like with the numbers I was telling you, with the fact that they're getting to that high 50% gross margin, hopefully by 2026, they can keep up with the demand on Mounjaro and Zepbound. I think that this thing really has some legs. I think that we give some of this $46 gain from Friday back. Hopefully we can buy this thing. If you guys vote on this thing somewhere in like the 870 range, 860 range, that would be pretty awesome. Through a little bit of volatility, a little bit of being maybe overbought from Friday, and let it kind of chill, let it settle out a little bit, and hopefully by next weekend, some of these stocks really are in that sweet spot for us to go ahead and purchase them. So yeah, that's the 5 that I got. I still believe in Mounjaro and Zepbound. I know that they got some other trials that are coming up. They've got assurances on GLP-1 drugs that should ease some investor concerns. We've got increased pricing, and what does this article say? Increased pricing. Where were we? And a better balance between supply and demand. That is just what we were talking about. Investor concern should ease with management confident that pricing will be stable and increasingly positive on production expectations for the rest of the year for weight loss drugs, Zepbound, and diabetes treatment, Mounjaro. So yeah, we had some huge gains. Forecast to 1652 from 1380. That is a big jump. And I think that they did $38 billion in these drugs on the last quarter. Was that right? I forget what the actual number is there. UBS has a buy and a rating of 1100 on this one. So again, I'm thinking these could be some good ads. I really cannot blame you for looking at NVIDIA with their 37% of upside. I can't blame you for looking at AMD. Yeah, 37 on NVIDIA. I can't blame you for looking at AMD, right? What was that, 40%? I think it was somewhere up there. Why are we not loading you? 42% on AMD. I can't blame you for looking at Amazon with 33% of upside. There are a lot of stocks that are in some good pricing right now. It is really tough to narrow it down to 5. So hopefully these gave you guys something to think about rather than simply just buying the big 7 blindly. If you're going to do that, you might as well just add QQQ and know that 50% of your money is going to the big 7 plus Costco. I was wrong saying that it was Eli Lilly. But yeah, with some of this pullback in the triple Qs being down to 450, we peaked out at 503. Hey, we're 10% off from the top in the QQQ. In S&P, real quick before I go, what do we got on this for the past month? I know if I look over the past 5 days, it's about flat, right? It's got some crazy. Well, no, it actually is higher than that. Sorry, we're up somehow. Over the month, we're down, but if you look at it for maybe from the 5th, yeah, we're up from the 5th, we're up from the 6th. So we definitely gave some back, but I do think that there is some more room to run in the S&P. I do think that there's more room to run in the QQQ. It just depends on what black swan events come in and kind of wipe us out. So, from what happens next in the overall economy and overall problems that are going to be out there in the world. So, with all that being said, thank you guys very much for stopping by. Hopefully, this brought you guys a little bit of certainty as to what's going on out there, understanding what happened in the market. If it did, I would really appreciate a share and a subscribe so that, we can build out a community of like-minded investors on the platform. And also, don't forget to join up to the Let It Grow Investing group on Facebook. I've got links in the description to get you started on crypto.com, E-Trade, Binance, and Webull. Yeah, Webull is where we're doing the investing challenge where I'm putting $200 of my money every week into the market based on results of the poll from the different Facebook groups, or you can vote right on Spotify as well. And thank you guys very much for stopping by, and I will catch you guys in the next one. Take care.